Okay, we are live. Um, I think we're gonna roll with the punches, depending on whose connection is faulty. Roy, how's it going?
Good. It's this guy's connection. Maybe not. Yeah. It's been a little while since we've done one of these. What's you been traveling, spending some of that money?
I have been doing both of those things, and yeah, it's been like 2 weeks, or maybe more actually.
It's been 3. Yeah.
Yeah, 3 weeks, but we're doing it now, and I'm finally getting adjusted to the North American sleeping schedule. I'm like ready to fall asleep right now, basically, but I have a call after this at 8:30, which I can't fall asleep for. And then it's Thursday night football, which I'm gonna watch, and the Mavs are also playing tonight. Uh, so that should keep me up until like 10 p.m. and then I'll be adjusted to the North American schedule.
By the way, I think SoFi was on. Was it Jim Cramer's show? CN
Yeah,
or
I think so.
CNBC? Yeah, like right at the same time. I guess just right before we came. So I didn't see that yet. Did you catch any of that?
No,
I guess we'll catch that later. So I
we'll
mean,
catch
what
it.
are they
Yeah.
going to say? Like we're amazing. We have a great business. Loans are doing really well. SoFi is a great bank. Get your money right. Boom.
Yeah, basically, by the time we're off of this, we should have the sound bites.
Oh yeah. Now, what we are going to talk about mostly today, and we might do some macro stuff too. We'll kind of
Yeah.
see how it goes. But we're going to talk about HIMS. There was some big news that came out in addition to earnings as well, that's worth talking about, and also Tesla because there's been some big news as well. Mostly election ramifications, but there's a little bit other with Tesla too. And uh, Tevis, is Tesla or is HIMS a larger investment in your portfolio?
Oh, Tesla by far. Yeah.
Yeah, I would have to look after today. I would say it's Tesla after today. Like yesterday, it might have been Hims. Like they're pretty close, but they've both been like, falling. So yay, I guess.
Yeah, I mean, I think technically, since I've been doing the covered calls, I've had Tesla shares assigned and I've replaced those with TSLL. So on an individual ticker basis, SoFi is my number one largest holding. But if you put together my Tesla and my TSLL holdings, Tesla is still like 30% of my portfolio. Hims is around maybe like 6 right now, 7-ish. And then Bitcoin's like 13, and then SoFi is like another 25%. And uh, yeah.
Actually, let's start out with Bitcoin. I
Okay.
was wrong. Let's see where it's at because who knows?
As you're doing this,
Not
I
stock,
am
but let me see
also
if I can present.
building a
Actually,
parlay.
maybe you want to share it,
Really
Mike.
funny. Um, Dude, it was 25 degrees in Japan. Leave me alone. I was doing like 20,000 steps a day. I gotta have short pants on.
All right, so my computer apparently is needing a reset, so I'm not going to be pulling up much other than what I have pulled up already. If you want to pull up the Bitcoin price, it's
Um,
down to
sure.
87,600. But did you notice that it was in an all-time high 2 days ago? Yesterday, actually, hit
Yes, it was.
93,500.
Yeah. Do you
And
wanna?
have you changed? Are you in any miners, Tevis?
I am in the minors, and I actually doubled and tripled down in the minors recently, which I'm happy to talk about as well. Do you want to restart your computer, and then I
Okay.
can carry the stream for 2 seconds, um, and then we can hit the ground running?
Am I like lagging up and freezing up, or is it okay right now?
I think it's fine. It's up to you.
Is it okay? No, we'll keep it like it is then. I
Cool.
just won't pull. I'll pretend like I'm you on vacation and not be able to pull up anything. So,
Yeah.
yeah, as far as Bitcoin, like I actually sold out of all of my miners completely. I
Right.
just between covered calls and between like price action, I'm like, hey, these are terrible businesses. Bitcoin will probably pull back at some point. And instead, I took the opportunity to sell cash secured puts, and so I'll slowly start scaling back into miners again. Had pretty good profits on the first run up. But yeah, Bitcoin, also in Bitcoin as well. It's one of those investments where I can just kind of forget that it exists at all. And that's a great thing about Bitcoin. And then when people are pumping it and talking about it left and right, it's like, oh, yeah, cool. I got some of that. So not a whole coiner. So I'm a small fry. But yeah, as far as hymns, a little bit of a drop. Did you see where it finished up, Tevis, on the day?
Like just under 21, I think.
Yeah, so we're down. I know in after hours it's running up just a little, well, about 4%, which sounds great, but down 24.46% on the day. Of course, it was up in pre market, so it feels like even more than that. That's a massive drop. What's
Insane.
going on? Are people no longer needing prescriptions?
So Hims is a very news sensitive stock. We've seen similar price action in the past where news has been released and it'll just trade on like these headlines. Like, for example, the one that comes to mind was the Eli Lilly shortage news and the whole thing with the FDA taking it off the shortage list and then them complaining. And Hims was like up and down on that news, and it doesn't really even affect them to that large degree. Today, the news was around like Amazon launching a competitor, which is a real risk. It's more real than a lot of the GLP-1 shortage news
Oh,
that
yeah.
we've been seeing, but it's also massively telegraphed by Amazon and by the whole market. And I feel like people investing in Hims today should have that as part of the risks involved in that investment. For it to fall a quarter of its market cap in a single day, like to me, signals something unforeseen, right? Like if something happened, you know, to him CEO, for example, he got in a car accident and he's in emergency care or whatever. I could see that dragging the stock down 25%. But like Amazon making a move that people have been talking about for years and years and years after they've made significant strides in that direction, like that's a formality in my opinion. Yeah, sure, it could drop the stock 5 or 10%, but 25%, I think that is an overdone reaction to a very valid risk. And I'm happy to talk about like the specifics of that risk. I don't want to downplay, the news itself. It's just the gut reaction is the thing that I take more of a pushback to.
Yeah, so let me give a little bit of pushback. I think that you're right that this is a more credible threat. The Eli Lilly news, than any GLP-1 news like that. They didn't even the GLP-1 revenue basically is a temporary thing based on an FDA shortage of drugs like Wegovy and Ozempic, and so Hims is able to make that along with other competitors just because there's a shortage. And once that's removed from the FDA list, which it may take a year, it may take less, that source of revenue is going to dry up for Hims. So they've had basically a sugar rush. This is their like COVID sugar boost that like PayPal got with all that like easy money, free revenue. The question is what they're able to capitalize off of that. And so they've handled capex very well. They're developing their own weight loss products very well, and of course having excellent results with that. They can actually be taken orally. But I think that the difference is, of course, Amazon is actually competing directly. Can you pull up that first link that I sent in the private chat there, Tevis, and just share that? Because I don't trust my computer to do that. That way people can see what we're talking about. But versus like other news that's happening, it's like it barely hits, or it was a kind of a known thing with Hims. This, I agree with you, was known, but it wasn't known when this would actually launch. And so they launched something, and then right there it has the pricing like very, very low per month. I haven't clicked on the website. I'm not sure if it's developed yet or not, but it's hair loss, anti-aging skin cream, erectile dysfunction stuff, a lot of generics as well. Is this exactly what Hims offers and just completely their whole product line?
It's definitely not completely their whole product line. There is overlap.
There is, yes, a lot more than like Eli Lilly.
Yeah.
So, and Amazon is also very good at distribution. So like they're the kings of distribution. Hims has excelled actually in this environment just because they're very good at it. But I would say, I mean, nobody's better than Amazon on that. And then they have a massive, massive scale. So
Right.
Amazon, like the two big things that Amazon brings to the table that Hims does not is Amazon can afford to run this at a loss forever if they want to. Now they tend to not do that. They tend to scale into a business. They try it for a few years, 3, 4, 5 years, and it doesn't work. Then they say, okay, we're done.
Yeah.
But no, they can run it like for a loss, destroying competition. And what I think that this will do more than anything, it'll hurt Hims, and we'll talk about the impact on that some.
Yeah.
But the biggest thing is, I think it's going to clear out the. It's going to be like a. Can you still see me?
Yeah, you're good. You're good.
Okay. Yeah, it's like lagging, and I'm like, I don't know if it's me or you, so I apologize if it's me, guys. Um, but I think that a lot of the smaller competitors that are in this field that really don't have anything like the moat that Hims has, it doesn't have the leadership as well. They're in serious trouble, and I think some of the like Walgreens, Boot Alliance, CVS, that fulfillment line, especially if Amazon scales into insurance, which Hims does not do, I think that they're going to be impacted on that too. So, but as far as Amazon launching this, like I think that's the biggest surprise is just when. I thought it might be like sometime next year. I didn't think it was going to be quite this early. But yeah, like a 20, almost 5% drawdown is a little bit silly, especially given the earnings that they printed. But, you know, the market doesn't fully understand Hims. I already, you know, I think it's very underpriced at this range. But so as far as like the impact, Tevis, do you think this is, I've seen all over the place, and I disagree strongly with some of the positions, but some people think, of course, and you don't think this either, but that Hims is going to go out of business, that there's no more future for them. Other people say it's going to take a hit, but that they'll still be around and they'll carve out a niche. Other people say, nope, exactly the same. Nothing's changed. And then there's even other folks that say it's actually bullish for Hims. So
Right.
what camp do you fall in, and why?
I think I mean, it depends on how you see it, but I think there's bullish and bearish aspects of it. You know, I made a video on this earlier today, and I basically said, well, the bullish aspect is the awareness that it brings to Hims, because by Amazon coming in, it validates the total addressable market, because Amazon is a $2 trillion behemoth, and they have very strict requirements in terms of the rate of return that they need to justify moving into a new space. If the space was small, then Amazon can't squeeze out a profit in that space. It's not worth their while. It's similar to, you know, how I see the whole like Warren Buffett investing, and why he doesn't invest in like SoFi or whatever. It's because that company is not, it's too small for him, right? And so similarly with Amazon, like it needs to enter a space that's large enough for them to squeeze out a profit. And then, you know, you think to extrapolate that idea and say, well, if Amazon, this $2 trillion behemoth, can squeeze out a profit there, you know, you have Hims as a $5 billion market cap. Like, you know, if Amazon limits the, let's say, top of the range for Hims, but also validates the rest of it, well, then you can easily find a 5x, 10x, 15x for Hims, because you have a market that a $2 trillion player is thriving in. And so I think that's the first thing, which is the benefit for Hims, is like, okay, well, we get a super big stamp of approval on the space that they're playing in. I think the negatives are, of course, that Amazon is another competitor, of course. And you don't want more competitors, because it drives down your margins, it drives down your price, it drives down your growth rate, especially Amazon, because Amazon brings three things the way I saw it. Number one, they bring that fulfillment network and, you know, the warehousing and distribution. Number two, they bring near infinite resources in terms of cash, in terms of human capital, and in terms of like expertise. And number three, they bring a huge network of Prime members. I think Prime members is what, like 200 million people, something crazy. I don't have the number top of mind, but Hims only has 2 million in terms of subscribers. And so if Amazon just distributes this to their Prime network, then all of a sudden, like, that's orders of magnitude larger than all of the members that Hims has been able to gather to this point. And so they already have Amazon already has themselves in a position to scale much quicker than Hims would be because they already have this established network of distribution, of resourcing. Like they can afford to run it at a loss for so long because they don't really care about, they can go into a war of attrition by just undercutting everybody in the space and outlast them. And so that's why I say it's a real risk. But is it something that's going to bankrupt Hims tomorrow or, make the company not exist? No, I think it's something that's going to eventually put pressure on their growth rate, put pressure on their margins, put pressure on their pricing power, and put pressure on their customer acquisition costs over time. And yeah, I think that's my high level thoughts. I want to also pull up that tweet that we were chatting about in the private chat because I think it's going to be relevant. So let me find that tweet right now.
Yeah, and while you're pulling it up, I think that it's a net negative. Like it's not
Yeah.
if you're spinning this as a positive, and you're a Hims bull like we are, you need to take off the glasses. Like long
Yeah.
term, killing out weaker competition is probably good. Like it's good for Hims, but at the cost of Amazon entering the space and selling some of your products at not like significantly lower, but it is lower, causing a
Right.
little bit of a commoditization on the generic drugs. Now, Hims, of course, has more than that. They have some specialized solutions and a lot of personalization. Like that's really where their mode is they're able to but really what Amazon does, and I think the market doesn't fully understand and grasp this, they do disrupt, but they typically do so in a way that doesn't kill off the leader. So back in pre-Columbian times, Native Americans, and actually even post-Columbian times in the Midwest, it's an area that doesn't have a lot of trees. I lived in Nebraska for like 6.5 years, and there's more trees now than there were like 500 years earlier. So one of the things that's interesting about that is that the natives would come and they would actually set fires that would consume all the shrubland and grass and brush and would clear all that out. So it's just like a giant prairie, but it would be a low grade fire. So it would actually leave the existing trees intact. And that's basically what Amazon does when they enter a space is the strong actually survive and do just fine. They actually long-term, I would still say long-term, this is a net negative for Hims, but it's not crippling. It's not going to destroy them. It'll stifle out and choke out the competition. You see that, of course, them entering in the grocery space, the grocery industry. There's a lot of smaller grocers and chains that are having issues. Walmart's doing awesome. Like look at what their stock's doing. Look what their EPS
Right.
is doing. They're a very strong competitor. You see that with Spotify, like they entered in to podcasts. If you
Right.
look at Spotify, both their actual earnings and the chart, like they're thriving. I didn't think that they would, by the way. They'd entered, and this might be before your time because you're a bit younger than me, but I don't know if you remember when they announced Prime Video. But a lot of
Prime
people were
Video,
like,
yeah.
"Oh man, Prime Video, we won't need Netflix now." And it's like, if you look at Netflix, they're doing just fine. And
Yeah.
one of the big ones too, if you throw up, I believe it's my most recent link that I sent there, Tevis, and then we'll maybe talk about Walmart's offering on this too, because it's interesting news and very relevant. Um,
The other
Almost
one
a
is
year ago to this date.
the other one is just before I go on to the suite. The other one is Fire Stick, right? Like in the hardware space, Fire
Yes.
Stick, Roku's not dead. Apple's not dead in that space. Like there are plenty of spaces that Amazon enters and coexists with others. And I'm going to talk about the healthcare space in just a second, but let me go to this tweet first. Take it away, Roy.
All right. So yeah, basically almost a year ago, Amazon announced that they were entering the car business. They were going to sell cars directly. It's not exactly the same business model as Carvana, but there's some overlap. And so people, there's a headline from last year: Carvana, CarMax shares tumble after Amazon says it will sell cars. Other people were hit as well. Big headlines like, "Oh man, kings of distribution, they're going to kill these." And if you look at Carvana, they're almost dead. If you look at their stock, it's like close to zero. And wait a minute, does that say 671% up year to date? That doesn't make sense because Amazon entered the space. They're kings of distribution. They crush the competition. But actually, what they do is they just kill out weaker competition. Carvana was actually not as weak as I thought. Didn't take either side of that. But this is what happens time and time again. They'll enter a space. Amazon will usually do well. Like not everything, most things that they launch have at least some sort of a success, and they have network effects too. But it's not their full attention. It's not their full focus, and usually that shifts away over time. And the leaders still emerge very, very healthy. So I think that that's what's going to happen with HIMS is that there's going to for sure be some pricing pressure. Maybe growth slows, and right now it's 40% year over year, excluding the GLP-1. GLP-1 makes it look amazing. So ignore that because that's going to go away at some point this year. But real subscription revenue, non-GLP-1 revenue is up 40% year to date. It may be looking at like 30% in a year. That's still really good. They're scaling very well. And I think that they're very clear leaders doing a lot of research before I got into HIMS in this industry. And so they'll get hit some, but they'll survive. They'll be fine. They'll continue to grow. It's not great news. The market, I think should have sold off HIMS some. I think it was a little elevated anyway. Like $30 is about the fair range value, 30, 32. So, taking a little hit makes sense. Right now, it's trading at a discount, and if it keeps falling, I don't really want to add more just because it's at my allocation level. But if that falls, suddenly my percent to portfolio is much lower, and I will add gladly. So,
yeah, I mean, first of all, Carvana is, I think, one of the top 5 performing stocks year to date, something to that effect. So terrific performance there. And then,
they'll go to zero tomorrow for sure.
Well, now that Amazon's in their space, of course. I think
Yes.
that also people can come back to us and say, well, actually, you're looking at all these different spaces. And, I just want to put up this tweet, and we were talking about this in our private chat on X. Amazon has been telegraphing this for such a long time. In 2019, they acquired PillPack. In 2019, again, they had Amazon Care. And if I'm not mistaken, Amazon Care was later shuttered 3 years later. They launched Amazon Pharmacy a year later, Amazon Clinic, RX Pass. They acquired One Medical. And this year, they are going after HIMS. And I like the last sentence here. They didn't stop HIMS from growing 50% plus each year. So Amazon is moving into the space, but at the same time, like you don't forget that HIMS is growing 77% revenue. They're projected to grow 91% in revenue in Q4. This company is doing tremendously, like 175% increase year over year in the personalized subscriptions, which is their moat. I think that as Amazon makes a stronger push, the first order questions that I'm asking in my mind is, is this going to be successful for Amazon, or is this just, one other initiative that they have that competes with all of their other initiatives? Like, are they diversifying their thought process, their efforts across too many industries? Are they spreading themselves out too thin? Or are they actually committing to having healthcare as a major vertical for themselves? So the first order of questions that I ask is Amazon going to be successful in this push? Because in the past, with Haven, for example, or with Amazon Care, 2 initiatives in the healthcare space that they had to shut down because they weren't successful. The demand wasn't there. They didn't quite meet the need. And then the second order of question that I ask is, to what degree does Amazon's success mean HIM's demise or HIM's, failure? Because the fact of the matter is that this business has grown tremendously with other large competitors. I mean, the space is so large that you're bound to meet some competitors, whether it's GLP-1s and big pharma, or whether it's, telehealth and Amazon. Like, it's a massive space, man. Like, there's going to be big fish in that space.
Yeah, it's actually larger, or I'd have to look this up. I know it was 2 years ago, larger than the streaming industry. So, and there's Amazon Prime, there's Apple TV, there's Netflix, there's Hulu. There's been some consolidation there for sure, though. And I think that that's what's going to happen in this space more than anything else. Is those smaller competitors will end up either going out of business because there's nothing there, or they'll consolidate with some others. Hims is actually in a prime position in that way because they actually are free cash flow positive and on a GAAP basis as well. They actually handle mergers and acquisitions quite well. And as far as a moat, people are asking about that, and that's a good question. That was, if you remember, when we were doing one of these maybe like 3 or 4 months ago, that was my question to you, is like, well, what's the actual moat? What about Amazon getting in the space? And oh, by the way, a little bit step back. I had people telling me today like that this was unseen by everybody except for Brad Freeman and like one other person.
Do you see this comment?
There we go. Yeah, nice. Yay. Is like, no, like any person that's been in the space any length of time, they're like, yeah, Amazon is eventually coming that way. I didn't think it was going to be this soon. Now, one other crucial piece. Oh, okay. Yeah. I was thinking you seem pretty bearish.
This is why we don't invite this guy to this podcast, because he's a loser.
So anyway, Hims has their own compounding facilities. Can Amazon buy that? Sure. Can they manage it to the same level of excellence as Hims? Probably not. They just don't have that same pedigree. They don't have that same amount of focus. The leadership of Hims is really, really excellent. I'm not saying that Amazon doesn't have that, but over their specific medical health one, I'm not sure that they do. They don't seem like they do. Typically in a space like this, they don't. They're not best in class. They're just good enough. It's a Microsoft Teams model. Hims also offers their own solutions, like their weight loss solution. Nobody else has that. It's just Hims. Hims has space on the store, and they have a heavy degree of personalization and subscription revenue. From that, it's actually more than 50% of what they have. So if Hims was like some of these other players, like the Row or Roman or whatever it is, or Blue Chew, like that exact same medicine you can get anywhere. And so the only difference for you is how easy it is, to go through the website, how expensive it is or cheap it is, and how quickly it can get to you. Amazon would win on all of those. If Hims was just like all these other little competitors, which people seem to think Hims is, they would be in serious trouble. But instead, they control their own costs well. They print money. They're growing rapidly, and they're in spaces where Amazon does not overlap and cannot overlap because they have their own proprietary products. So there is going to be some pressure, but I think that this will be a little bit more successful for Amazon than what Walmart threw up. If you don't mind posting or clicking on that second link there that I sent you, Tevis, and I apologize for my computer not being happy with me at the moment. It needs some Hims medicine, I guess. I don't know.
Yeah, let me just throw this up for a second.
So for those that are not aware, I think it was 4 years ago, Walmart entered the space. Is that it? Yeah, if you scroll down. So Walmart entered the space and ended up, it's not exactly what Hims did, but they were doing prescription fulfillment, which is a little bit different. They were doing telehealth. They had a physical location in many of their stores. And they were also doing some of the generic medicines as well. So there was some overlap with Hims. This is not an easy space to enter. And I think Walmart messed up in two respects. One is they just assumed because of network effects, and they're gigantic, that they can offer this and people be like, hey, cool, I'll go ahead and go through. Man, Tanner, how dare you? They'd actually go through and have people as they're shopping just pop in, get their prescriptions, get checked out, whatever, and that would be fantastic network effects. Plus, they ended up partnering and signing a 10-year extension agreement. I believe this is in 2022 with an analytics platform that basically specializes in telehealth data and prescription data. So they had significant amounts of data. They had the distribution model, and Walmart does very, very good with this too. They had a physical location, and yet you see the scroll down just a little bit to the image. This is earlier this year. This is 2024, April 30th, 2024. Walmart Health is closing. Wow, that's weird, Tevis. Like they're huge and massive. They can run it at a loss for years. They have a massive space, massive network effects. They're kings of distribution. Why in the world would they shutter? That doesn't make sense. Surely Hims should have shuttered.
Right.
But, the thing that is missed is this is not an easy business to get into. And even if you're a giant like Microsoft or Amazon or Walmart, you don't want to just bleed money infinitely. And they actually ended up, and I highlighted it there, we determined that there is not a sustainable business model for us to continue. Now, I think that Amazon is going to be a little bit better, and they don't have the physical overhead, although that wasn't as much of a deal as Walmart. Walmart already had the store; they weren't building separate. Well, there was a couple of exceptions, but no, I think that this will be about the same thing. That we'll look back in a year's time, but there's going to be some choppy waters between now and then. It'll be like, oh, yeah, it didn't make too much of an impact. Like long term, I don't think it's going to make much of an impact at all. So,
but like also, okay, I think there's a sliding scale, right? Because on one hand, you have people who say this is not going to impact, or even people who say this is bullish for HIMS, like on aggregate. And then on the other hand, you have people who say this is absolutely going to kill HIMS immediately. And I think the truth is going to be somewhere in the middle, which is what we're saying. Like we're not, underestimating the Amazon risk at all. We're saying that there is a risk and that there is some type of market share, attrition that's going to happen as a result of this move. But even if you like the thought that goes through my mind is, okay, what percentage do we feasibly think that Amazon is going to take, and how does that slope over time? Because if, let's say, Amazon takes a couple of years to ramp this up to, the level where they have a personalized solution, or where they have something that's actually comparable to HIMS Moat, and they start actually eating away, market share. Well, you have a company here in HIMS that's accelerating their growth currently. And in order for that to make an impact, that acceleration has to slow down to the point where it plateaus into and stabilizes into a growth rate, probably going to be somewhere in the 70%, range. Right now, like if we're looking at next quarter, 90% growth. Well, what's that going to be next year? 80%? What about the year after that? 70%? The year after that, 60%, 50, 40, 30? It's like, well, all of a sudden you've priced in like 10 years of extraordinary growth for this company. And then you're saying, well, Amazon's going to kill this business. It's like, well, the business has already done a 10x from a $5 billion market cap where it's trading at right now. So I don't understand why people are selling it off in such an aggressive manner so early in the story.
But honestly, like this happens, it's not just a HIMS thing. HIMS is very volatile anyway, and it's a smaller cap stock. It low float rather, not small cap. But it's almost small cap actually, maybe after today. But whenever a hyperscaler, whenever one of the large cap tech stocks enter a space, that could be Apple, like showing off, oh, look how innovative we are. We can tap our phones together and send money. PayPal's dead, and it like tanks, like 8%. It's like, okay, that's really silly, but it's headline risk. You have that, certainly with any of the other major players that are large cap tech, and they are good, very, very good companies, but that doesn't mean that they're going to win. Yeah.
Right.
Giant banks may kill SoFi. SoFi is a gnat. HIMS is a gnat. I do think HIMS actually maybe is a little bit better than a gnat, because I think that they are outside of Amazon, like they were on a trajectory to be the leader in this space. I absolutely believe that. I think within 5 years we would see that, and I think that honestly we're going to still see that, although Amazon is going to exist.
Yeah. Absolutely. And I just think that, okay, what is your projection for this company? You want to hold this company for 5 years or 10 years. All right. Let's just say you want to hold it for 10 years. That's your thesis. That's your holding period. Right. What is your projection of, like, what do you want to get out of this investment in 10 years? 10x in 10 years? Is that good enough? Well, 10x in 10 years is $50 billion in market cap. Great. What is the growth rate for this business to justify a 10x in 10 years? And feasibly then model out, okay, what is the market share that you think Amazon is going to take away? And how negatively is that going to impact the growth rate? Can they still get there to a 10x in 10 years? And my whole stance is absolutely they can, because of how small this business is and the numbers that they're putting up and the competitive advantage that they're already showing to have in that personalized solution. Even if Amazon takes away a chunk of it, like you're talking about a total addressable market that's massive, like massive. And then you also have, not to mention,
And
Roy,
the
you also have, just as a last point, the call option on all of the other product lines that this business is going to introduce, because we know that roughly once a quarter they introduce new product lines, right? Is Amazon going to go after all of those product lines? Is Amazon going to start formulating their own, compounds? Is Amazon like, to what degree, right? Because Amazon can offer a distribution network to their Prime members, and that's great. Or they can offer like the RX pass, which is an add-on subscription to their Prime members, but it's all built on their existing Prime network, and it doesn't go so far as the solutions that Hims does. Like Hims is like creating their own, compounds. They're creating their own personalized solutions. And I think that that is just a level of depth that Amazon is not going to get to, or at the very least, they're not going to get to in the immediate short term. They're maybe far out. And again, you have to ask those two questions. Are they going to be successful? And if so, how much market share are they going to steal away from Hims?
Yeah, I mean, I kind of see it like I haven't projected out 10 years. It's closer to 5 what I've looked at, what they're doing, what they're launching. Noting that GLP-1 revenue will be, something that we can't count on over 5 years, certainly. Maybe a full more, another year, maybe a little bit longer. I think probably less. But if we were, let's just hypothetically, let's say Hims is a 10x company in the next 10 years. I think that's lowballing it. But let's just say, if it was 10, Amazon entering the space might bring it down to like a 7, maybe an 8. Like it's still a good investment. So, Tanner, man. But Hims is. I had somebody else ask a couple of questions. I see a couple of people asking, well, why didn't Amazon just buy out Hims? Somebody made a good point. It's partly because Hims is probably not very much on their radar, like somewhat, but they're so massive. As far as all their competition out there, I'm sure that they've taken notice or aware of Hims. But the other aspect is Biden is still the president. There is still regulation that is very, very antitrust right now under Lina Khan. And as a result, I mean, they tried to buy a robot vacuum company and they were shut down. So there's no way that they'd be allowed to gobble at something like a Hims. They wouldn't even try. Maybe they'll try under the Trump administration. We'll see. I do think that there is a potential larger threat out there that the market, I don't think it's really pricing in. Because when Trump was elected, like one of the things that is, I think, a negative, and you, I think, have the other side of this, RFK Jr., like I researched him on that night because when he actually was announced, rather, the head of the, help me out, FTC. And he has some interesting views on certain subjects. I'll try not to get overly political. On some of it, I absolutely agree with him. But he is very against the modern pharmaceutical industry. And specifically with GLP-1, he has comments, and it's all been negative on GLP-1 overall. I think, GLP-1 is part of the solution along with diet and exercise that people can use. If it helps them be healthy, great. The solution is not ultimately just get shots and get drugged up, and that'll be good enough. But so I think that depending on how much of a free reign that RFK Jr. has and what he's allowed to do, that may be a little bit of a headwind against actually both Amazon in this space and Hims. So I think that that's actually a larger threat than anything that Amazon announced today. Yeah, I think that is fair. Like what Lilly does is not anything close to what Amazon does. A little bit overlap, but very little.
Again, I don't necessarily know the RFK thing is just thoughts that I'm thinking out loud because I haven't dug that deep into the specific policies. And the question is RFK, his new position that the Trump administration released today, is that going to be bullish or bearish for Hims? And my main stance was around GLP-1 specifically because of that whole Make America Healthy Again mandate. Maha. From
they're calling it
from that perspective as a standalone. But I also think that increased scrutiny towards big pharma especially from, like a patent perspective, is going to help smaller players in the industry like Hims. And then increased scrutiny on a regulatory perspective towards the FDA is going to help compounders with regards to, again, statuses of drug shortages, of um, what do you call it? Statuses of drug shortages, and just the patents in general, right? Because Hims has their hands tied in terms of what they can and can't make, off patent drugs being allowed, and the sort. So I think further deregulation and going after big pharma, those things paired together will end up being a net tailwind for Hims. That was just my high level thinking. But again, I'm not that deep into his policies.
Yeah, yeah. I was following him as a candidate, so I maybe had, well, and I also was able to vote for him. You're in Canada, so you can only watch and eat your popcorn. But yeah, he's. I think Sagig had it well. He said he's a wild card. Like he's an unknown. It could be very, very bad for him. Well, not maybe not like very, very bad, but that GLP-1 revenue could just be like obliterated quicker than we expect.
Like, have you
But
seen have you seen this tweet? Because I tagged this. Um, this was on October 25th,
yes,
before the election. The tweet reads, "The FDA's war on public health is about to end. This includes its aggressive suppression of psychedelics, blah, 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 blah. And anything else that affects human health that and can't be patented by pharma. If you work for the FDA and are part of this corrupt system, preserve your records, pack your bags." So essentially pushing more deregulation and pushing more efficiency in the FDA is how I personally read that.
honestly, that sounds bullish for Amazon's medical health one.
But
It does. Like, I'll just call it like it is. And again, I'm not saying that Hims is dead in the water. It's not. Some headwinds certainly there, and we'll see what RFK does. Do you
what's
have
the
anything
medical
else you wanted to
health one?
share? Pardon?
What's the medical health one?
I might have put the words in the wrong order. Amazon's product they're offering.
It's their acquisition, but like, what is it? What's the product?
Oh, that was a telehealth. So they entered it with telehealth, prescription fulfillment. They do somewhat. They kind of backed away from that, and at least from the announcement today, that's related to all the Hims stuff. It looks like that they're going to get back into it. Like I think they mentioned insurance like 2 or 3 times. In like, as far as like, we're interested, we're considering those sort of things. When Amazon does that, it's basically like, don't be surprised if in a year or two, like, there's this big announcement like, hey, they're into prescription drugs, which, by the way, Hims does not do. That's not a category. But what they announced today is very much what Hims bread and butter is, although
Right,
with some
so
differentiation.
if it's going to be like, just using your statement, if that tweet or that stance against the FDA is going to be beneficial for One Medical or Medical One, wherever it is, like the Amazon version, well, Hims has the exact same thing on their side with their telehealth solution. So it would stand to reason that it's just beneficial for both, no?
Maybe. We won't know until he actually starts doing things. So, one other election implication, I guess, before we go there for Tesla,
Sure.
anything from earnings, because we hadn't really talked earnings from Hims that stood out to you as like, this is really interesting or this is worrisome.
I mean, a couple things stood out to me. I think the management commentary on new product announcements and how they're circumventing the GLP-1 shortage, and like how they're going to get ahead of it with liraglutide, and overall what they're planning on releasing next. I think that is impactful, and I think it warrants a second listen to that earnings call, because they dropped a whole bunch of little pieces there, especially because all the analyst questions were around GLP-1s, which I found fairly telling.
Yeah.
I also found it kind of weird today, and I mean, we can segue to this if we want to, but kind of weird today how B of A immediately downgraded Hims, like on the same day that Amazon came out with this news. And meanwhile, like, they have a 19% short interest and they hit all-time highs yesterday. I'm like, okay, well, kind of coincidental for all these things to be happening at the same day, but we can jump to that after. Going back to the earnings call, I think the guidance raise was fairly significant. 91% revenue growth is nothing to sneeze at. And
Yeah.
I think the buyback range was kind of interesting, $15.80, something like that is essentially the floor where management is saying, yeah, we're undervalued at $15, which is crazy because this thing was, trading for under that for so long, the majority of the
Right.
year. And then I think that driving the main value proposition of the business is, was in full display on Q3 earnings. Like the bull case is playing out just how we said it would, right in front of our eyes with regards to personalized subscriptions now being over half of the total
Yeah.
user base,
That's huge.
over a
That's
million users, and growing 175% year over year. That's fantastic because if Amazon comes into the space and if others, which there will be others, by the way, guys, the space is big enough that you're going to see more and more competition. As they all approach, you're going to have to differentiate this company with their moat. And people are going to start asking more and more, what is the differentiating factor that HIMS has that these competitors don't? And one of those is this personalization aspect. So it's really amazing to see that it's the fastest growing segment by a long shot. And then the last thing I'll say on the earnings as an interesting, tidbit is hers is now 400,000 members, growing incredibly quickly. And management highlighted that they think, it has the potential to be bigger than all of the HIMS products. So that's going to be something that's really interesting to keep an eye on as time passes. How about yourself?
Yeah, I think you hit the highlights. One of the other aspects that I thought was really compelling was they have a bit of a flywheel effect, right? So, one of the aspects of personalization is instead of having like five different medicines, you can have, one pill or well, not gummy yet, but gummy soon. Instead of taking a whole bunch of different products and trying to remember that. They can't do that with everything, but they're increasingly leading that. There are other companies that do that personalization aspect as far as making sure that the medicine matches your profile, which honestly, like the modern medical system is pretty far behind, except for drugs that really, really impact your health on. Like one of those things, I got some red in my beard. I'm a redhead. I don't know if you know this, but redheads, for whatever reason, are actually more resistant to anesthesia than non-redheads. It doesn't make sense, but there's something there in the DNA. I read this long, long white paper on it, and I was like, okay, well, it's
Wow.
legit. It's not just internet lore. There's a reason why redheads hate dentists, and it's because we go in, they give everybody, they're like, hey, I'm a huge dude. And they're like, but I'm not. They're not numbing my whole body, just a little part. They numb me, and I'm not fully numb, and it hurts really bad. And then I'm like, no, it still hurts, and they have to shoot me 2 or 3 times. It's terrible. Almost every redhead I knows that. Now, there are a lot of little things like that, which, medical field is very, very broad. AI is going to help with some of this. But as far as prescriptions, they can take a large amount of data. Amazon can do this too, but Walmart was also doing this. And remember, they closed up shop, but they can make sure that this is really the best fit for you as far as medication, as far as dosage, as far as recommendations, but they also have the different mediums. So if you can't do this with every medicine, there's some that you have to take through a shot. I forget the medical term for that, but there are others that you can pick the form factor. You can take, you can have a gummy, you can have a hard pill, you can have a mint, whatever that is, and they're leading that. Like there's nobody else that's creating that level of personalization as HIMS. Will there be others that follow and catch up? Yes, but
Mhm.
HIMS is not going to just be like, okay, we've innovated enough. We're just going to stand right where we're at for the next 5 years. If they did that, they're Teladoc. They're dead. But they have really, really compelling leadership. And so there's a cross sell now, flywheel effect between some of their products. I think it was their oral weight loss solution that was mentioned. I can't remember the percentage, but I think that basically the percent that's using that and at least one of their other products has increased quite a bit. And so they're cross selling other additional products to folks that already are enjoying and in the HIMS ecosystem. So as they continue to get bigger, as they offer more different form factors, as they offer more to medication types, that's only going to scale. So they have a long ways to go. But yeah, they're absolutely executing. Leadership knows what they're doing, and they're the leader in the space. So I think just to recap, I think the exact same thing will happen with Amazon as it does in all other spaces. There is some margin compression, Maybe there's a little bit of slowed growth, but really the leader continues to emerge as the leader. Amazon is maybe second or third best, and it kills off all the smaller competition. Still not a great thing for HIMS. I'm not saying it's bullish at all. It's a little bit bearish, but no, it doesn't wreck the thesis at all.
Very
As far as
quickly,
Tesla, though,
wait, hold on. Very quickly, do you have a opinion or thought or comment on my little tinfoil hat short attack thesis?
I never really like to comment on those too much. Like I think that with the exception of notes, that they're most of those are not really credible. As far as like Bank of America, like I don't think that they would get involved with that. Like there'd have to be a massive amount of money, and even then, I don't think that they would, even as sketchy as parts of that organization are. So no, I think that it's just one of those timing things, and of course, it happened on a red day in the market. Somebody asked, would it have gone down as much on a green day? No, it would be down like maybe 20%. That's just how it kind of works.
Brutal. Just before we move, did you buy more or do anything? I think you said you didn't.
No, I haven't yet. The dip will probably last a few days and keep going down. I would expect. There's a rule of
3 days?
basically on the third day. Is it the rule of three or the rule of two? Basically,
I think it's 3.
a lot of investors, operate by that. That if there's a massive drop, they'll wait until the third day and before they buy in. And so I'm going to look on Monday, see where we open up, and likely sell some cash secured puts at a certain level. I mean, you mentioned 15. Like that's a really, really comfortable and safe level to me. It actually brings down my average, which is really nice. But no, I have my allocation percentage is maybe a little bit below where I want it right now because of the fall, but it's a comfortable amount. And so I'm going to wait until we get a better price and I'll average down. And if we don't, if it goes back up, I've got a lot of shares. So I'm pretty happy.
Yeah.
No leaps, no options. I don't know that I'd ever touch options with this one. Do you have some leaps on HIMS?
So, okay, real quick. First of all, I think you're crazy for thinking it's going to go back down to 15. It totally could actually,
It
like
could.
as early as tomorrow. But
Yes.
I think
Not
that
crazy.
no, I I think we're going to bounce back. I did buy shares today. I also bought. I added to my 2027 leaps, and then I added shorter term calls. So if you remember, actually on my earnings play for HIMS, do you remember we talked about on a bootleg weekly? I
Yeah.
bought $22.50 calls for November 22nd. Those were up 700% yesterday, and I think they're still up like over double today after that 25% drop.
Uh,
So I added January 2025's $23 calls for pretty cheap. And I added my 2027s. And I also sold cash secured puts on HIMS for next Friday for $23 strike price. So we'll see how that goes. But basically, I think that there's going to be a bounce back, and I'm just trying to capitalize as much as possible.
Yeah, and Gabe asked my portfolio percent. I allocated at around 5%. I think I rounded it up just because I don't like odd number of shares. I did that at like 25 or $26. So, but overall, I think my average is in the 17s or 18s. I'd have to look.
Yeah.
And no, I'm comfortable with where I've allocated. As I get to know HIMS better, I'm a fairly new investor. There's still a lot of things I'm getting wrong on HIMS that I'm learning, that I'm figuring out. Like that earnings call was really, really helpful though. So I'm a little more confident. I don't mind bumping that up to maybe like 6.5, 7% possibly. All shares. It would have to get stupidly low in price, like
Yeah.
$11, $12 for me to be really comfortable with leaps, just because it's so volatile.
Right.
And honestly, like the premiums on leaps, they're not cheap. It's almost just better to buy shares at that point, and there's no risk. Like I can hold shares as long or as short as I want. But no, I'm comfortable with my amount. We'll see if the stock continues to fall. Most likely, I'll sell cash secured puts, 15, 16, maybe even $17, a little bit below my average into next week. The premiums are really juicy. That's not why I'm doing it though. I am very confident with the direction the company is going.
Mhm.
Yeah, this hurts a little bit, but it's not unexpected. So I'm more bullish on SoFi than HIMS right now, for sure.
SoFi at 14 versus Hims at 20.
Yes. Well, so it depends on the time frame, right? So if we're talking about over 10 years, SoFi, like SoFi
Mm.
is basically guaranteed. It's not, nothing is guaranteed, but Hims, like, could RFK like throw a loop? Could they mess up hugely on compounding and have this massive lawsuit that shuts them down? Could their CEO continue to tweet lots of things and people hate them and throw there's a lot of things that could happen that are unknowns versus like SoFi. What's the worst going to happen with SoFi? Like somebody reiterates their like $4.50 price target.
I
Like,
mean, I could just list you like 10 things that have happened over the past 3 years with
so
regards to the moratorium and all
yes,
these other things.
but SoFi, like their worst case scenario, it was already happened. Like during COVID, all the student loan repayment, which was basically most of their business, was taken completely away. And yet they, through acquisitions and through innovation, they turned a profit, transformed their business, and they're thriving. Like that's a company that's going to be around. Hims, I have a very strong and compelling thought that it's going to be very, very good. But there's a little bit more risk with Hims. I think there's also more upside. Like I'm not
Yeah.
going to kid you. I think the upside is a lot higher with Hims than with SoFi. But SoFi is very safe long term. Like short term, I would probably say Hims is going to probably outperform despite Amazon over this next year. It's going to be close though. I
Yeah.
don't know.
So I'll take the other side of that in saying that I think Hims at 20 is probably a better deal than SoFi at 14. It's absolutely the more risky play. I agree with everything that Roy said. I think SoFi is the safer play.
I think you
Probably,
can just end it that I agree with everything that Roy said. Like that's just
I
kind
don't
of
think that tells the full story though. Like I do think that
no.
the
I'm messing
like in Hims, you're looking at a company that's growing 80% plus, right? That's under a $5 billion market cap, and that's doing 70-ish million in the bottom line, right? In SoFi, you're looking at a company that's double the market cap with like a 30% growth rate and what? It's pretty much the same in the bottom line. And so I don't know, man. There's trade-offs, right? Like I think that Him's volatility is what's hurt us in the past, but Him's volatility is also the reason why we bought it at $13 in September and it hit $30 in November. And meanwhile, like if you're a SoFi investor looking at that, it's like you're doing, it's like you just dropped acid or something. You're like, what the heck? Like, what am I seeing here? Because with SoFi, it goes from, $7 to $12 and you're like jumping up and down. People are making memes and everything. And with Hims, like it does that move on a daily basis. So, anyways, shall we jump to
Yeah,
Tesla?
it's yeah, let's do that. So, Tesla, like the biggest piece of news, and we'll talk about maybe election ramifications, but one of those is that the $7,500 tax credit on a new Tesla, and likely the $4,500 on a used, with certain caveats, is going away. Now, the way this works here in the United States, uh, I had to do a little bit more thinking other than my first take. I'm like, well, of course it's going away. Like we knew this with Trump. Even Elon Musk said that he was not in favor of that credit anymore, which is kind of interesting. But it's not going to be probably day one when Trump gets in the office. The president doesn't have that kind of authority. Yes, they can do executive orders. They can do things like defunding certain programs right away. They can send something for but with a tax credit, you can't do that. You actually have to go through the legislative body. You can possibly, although I'd have to do a little bit more research on this, tweak the reading of who is eligible for that tax credit in such a way that kind of tanks that. But the most likely scenario, I think, is Trump gets in office, and this is part of a tax reform bill that this is removed, and then there's other things that are added. There's a lot of stuff that's basically happening. And as a whole part of that bill, then this is eventually passes through both houses. or the House and the Senate, which are Republican controlled, and it should pass without too much of an issue, though there will be some back and forth. And most likely that'll either come into effect the next year, which if it's a part of a broader tax package, that'll be the case. It won't be like January 2025 when this ends, but instead January 2026. Or possibly if they do this as a standalone measure, they could do that retroactive to the beginning of the year. That's very unlikely. That almost never happens unless it's an emergency of some sort. They could do it active as far as that date, but that causes disruption, a lot of issues, a lot of unhappy folks. So that's very unlikely. Most likely it's going to be the earliest that it'll be active is October 1st. That's the beginning of the next fiscal year for the federal government. But I think that it'll probably be a January 2026 that hits on day one. And so is this a thesis breaker? Like, you see Tesla's going down. Is it over?
Yeah, I mean, I feel like you're setting me up with these questions. Look,
Softballs.
yeah, seriously. Like, Tesla's own representatives have come out in support of killing the 7,500 tax, credit tax rebate.
Well, why?
Well, it hurts their competitors way more than it hurts them. Like, it absolutely kills a lot of their competitors. And then, not to mention that, like, when you pair that with tariffs, a lot of these Chinese players and a lot of these foreign companies, they're absolutely dead in the water, right? And so Tesla is going to be, it's not going to be great for people who are like consumers who are buying it, because that tax credit was just another reason for them to buy an EV. But people who are going to buy an EV regardless, like, I think that Tesla is going to absolutely bleed out a lot of their competitors with the removal of this. It's going to be short-term pain, absolutely, but I think the long term is Tesla's going to come out on top in that war of attrition. We saw a lot of this in 2022 with the margin compression. Yeah, Tesla got hurt, the stock got killed, but at the same time, their competitors got hurt even more. Like, a lot of these ICE, manufacturers, they've had to shutter their entire EV, segments altogether. I think, GM, like, just look at what they're producing and what they're selling. It's just completely not on the same level. And so, I think that the wider story here is not necessarily the 7,500 tax credit, because, like, I think it's super telling that Tesla's own people are supporting that. I think the wider story here, which is the long tail, bull thesis for Tesla over the next several years, is the fact that Elon is so, like, he's in the driver's seat essentially from the government side. And the amount of flack that Tesla has caught, along with SpaceX and all of these other Elon companies, from government bodies, is absolutely insane. And all of that is going to come to an end. And it's actually going to probably create more favorable conditions for Tesla going forward, because now he's, a part of that Department of Government Efficiency. He's a part of, he's first buddy to Trump. He has Trump's ear. And so, of course, that, he's going to make it so that Tesla has some beneficial treatment there. And I think a lot of people are realizing that, and that's why the stock is moving up. There's so many tailwinds for the business that this tax credit thing, first of all, we knew that it was coming. And second of all, like, it's not even a big deal because Tesla's own team is in support of it. It's going to suck for consumers, but again, I think it's going to be good for the company when you look at competition.
I disagree completely. I don't think that it's a thesis breaker. I agree that it is terrible for consumers. But where I disagree is probably in the definition of competition. Back in 2012, 2014, Elon Musk famously released a bunch of patents that basically helped competition scale the EV industry. He mentioned his stated goal was to help grow and scale the EV industry. And part of that was, I think, a savvy practice, just that we're actually seeing the first fruits of, that as more people are interested in EVs, of course, they look towards Tesla, who's a clear leader. and you have some ecosystem benefits, like with the supercharging network. Although I don't know if he foresaw that, that far out in advance. I would say that Tesla has already won outside of Chinese imports and a few niche products. Like, they are the EV manufacturer. Is there competition that exists? Yeah, I mean, Rivian, Lucid, these are not companies that are doing anything other than taking massive piles of cash and lighting it on fire quarter after quarter after quarter. I do think that they have good products, especially Rivian. I think Rivian will probably make it, and maybe even be bought out. I mean, honestly, Amazon should just buy them out at this point. But no, I think that this is going to be difficult because the main competition at Tesla is not other EVs. Of course, they're protected because of tariffs from Chinese EVs. It's actually ICE vehicles. And so the existing industrial combustion engines. There are some people that no matter what, they don't want to have an EV, but most people just want to have the best ride, bang for the buck. If Tesla is, for a used vehicle, $4,500 cheaper or $7,500 cheaper, which is more than 10% off of the sticker price of almost every one of their models, that's a substantial reduction. It puts them on par. And if you look at like bang for the buck of a vehicle, like the Modern Y, even non-refreshed versus anything else that's out there, it's very, very compelling, even for somebody that is maybe a little skeptical on Tesla. Now imagine if these were still intact, and I think that they will be still next year, when and if the Model Y refresh, the Juniper model, comes out. If it's at all similar to the Model 3, Model Y is already very popular. That is going to just, as many cars as they make that year, they're going to sell. Like they're not going to have a problem with demand. But when it's $7,500 cheaper, that's a lot of money for folks, even if we're financing it at a cheaper rate. Now, Tesla is not dead. And I think quarter four is going to be phenomenal because there will be people that are afraid that Trump will write an executive order that will strip out or cap the number of benefits for that $7,500 credit right away. And that may be the case. And so we're going to see a lot of demand that's pushed forward from quarter one and quarter two of next year into quarter four. So it'll look like they're thriving. But in actuality, I think that this hurts them over the long run, even though it does help them against other EVs.
Yeah. Okay. So let's meet in the middle, right? And
No.
really, I think the truth is going to be somewhere in the middle because, like, at face value, you could very easily bucket this into the statement to say less subsidies equals less sales. And that's a true statement, right? If you have fewer subsidies, you're going to have fewer sales because the thing that you're selling is more expensive to the end consumer, period. And so to that degree, it hurts Tesla. And I think we can both agree with that. It's not going to be beneficial for Tesla. But the whole point that I'm trying to make is it hurts Tesla less than it hurts their competitors because Tesla has better margins than their competitors. ICE can't afford to make EVs with no credit, man, because it's going to eat into their it's not going to be like profitable for them to do so. Maybe they're going to be eking out, a very slight, profit. But again, my point is it's going to be detrimental to their sales more so than to Tesla's sales. Tesla already has mastered through vertical integration low-cost EVs that have high profit margins. We saw margin compression in 2022 through just the macro, and that hurt Tesla quite a bit, but it hurt ICE even more. And so that's the whole thesis: is what hurts Tesla today. Today it's the subsidies. Yesterday, it was the rates. It's going to hurt ICE even more because they have a razor thin margin of safety in terms of their profitability, because they're not as vertically integrated as Tesla is.
Yeah, I think that I think the main competition is ICE vehicles. So I still disagree. I'm not going to meet you in the middle on that one. But no, it's not bearish. I'm not gonna. I strongly disagree. Like, they've already won the competition against EVs. There is no real credible competition at all, and it's the ICE vehicles. It's next. Now, it's just going to take more time to play out, honestly. And the sticker price is the most important factor, I would say, for most consumers that are driving vehicles. There are other factors too. It's not the only one. But once a person, well, the other thing too, think about it this way. Once a person has made that switch and is using an EV, unless it's just a terrible fit and experience for them. And I've known some people that have done that. Like they can't charge at home, which makes EV a lot less compelling. And it's quite a bit different to drive. And so if you don't want to learn that, if you don't want to have your smartphone and use that as a key, like you're like, wow, this is a terrible experience. And I can't even have a gas can and fill it up, is like, no, it's not for you.
Right.
But almost everybody that once they go EV, myself included, you never ever want to go back into an ICE vehicle. I hate driving our other car. It's not a great experience at all. Teslas are not perfect by any means. But no, I think that the more people you get into EVs, whether it's Tesla or something else, that the person's next vehicle is going to be another EV, and this slows that progression down. So, net, I think that it's not a small negative at all, but I also think very likely just the way the U.S. legal system works is that this is going to take more than a year. That the next year, I think, especially if they launch the Model Y refresh, they're going to sell so many freaking models as people gobble up. And anybody and their mother, like right now, I don't think it's on too many people's radar, like, oh, this tax credit might be going away. But if they have a year to kind of sell that narrative and like it is going away by this date, if you want an EV, and by the way, we have this brand new Model Y that's refreshed with the vintage seats and all the bells and whistles and the screen and back, it's already the number one selling car, or at least it was last year, in the entire world. They're gonna freaking dominate the market.
More importantly, 0% APR financing. Like, you're selling everything.
We'll see if that's still around next year. It wouldn't shock me. Like they can sell so many vehicles next year, Tevis, and so like I'm very excited with where Tesla's heading. But yeah, this is not really bullish. What is bullish, and the reason why I think that, okay, well, actually, I'll let you answer this. If that's the case, and we kind of knew this going in, that the $7,500 tax credit was going away, why did Tesla start pumping overnight in the election and continue to pump into the mid 300s?
I answered it before, right? I do think Elon's role in the new administration, and more importantly, having a new administration that is pro Elon and pro Tesla and pro innovation and pro efficiency in general, I think over the next 4 years massively benefits a company like that. Like it's a bigger issue than just one tax credit. Like this Tesla stock is not going to pump from 213 to 340 on a freaking tax credit, man. Like the reason it's pumping is much more a long tail benefit over multi-year period than just one single issue.
So Tesla is still very good. By the way, we're going a little long, so I probably won't go into this much, but we can maybe next time. And I'll do a post on it maybe this next week. My full self-driving trial is nearly at an end. It's hardware 3, not hardware 4. That may make a difference. I think it actually saved and prevented one collision for me. It potentially could have caused like 3 others. So there's a couple of reasons why I'm not going to extend that subscription. But I could see a scenario next year where I do. That is actually really the bull thesis for Tesla. And with regulation being somewhat lessened, although it's more at a local level, I think that the full self-driving and automated driving, like for Waymo even, under Google, like I think they're going to do very, very well over the next few years too. So I did want to share just one little blurb. Do you have anything else on Tesla that you wanted to share or talk about tonight?
Not on Tesla, but Charlie's asked me like 4 times, and I want to just spend like a few minutes just talking about the miners and crypto in general.
Okay.
I have to go at 8:30, so in 15 minutes. So if you can swing that, then we can talk about the miners. But did you have something other than that you want to chat
real
about?
quick? Somebody asked about Enphase, why it's up. They announced a partnership that'll help them sell actually more inverters and distribute those. That's bullish. This is an industry that I think that the market's getting wrong. I'm not 100% confident in that. All I've done is sell very conservative cash secured puts, and I may end up just buying shares this next week. I have a conversation with Carlos, Sphere Cubed, Finance Junkies. He's been in phase 5, 6, 7 years when it was trading at like the $2 range, something like that. So he knows this company very, very well. I'm going to have a conversation with him, and I'll post that video on Saturday. That may be. I have some questions, and I have some things that I kind of want to push against the in phase bulls narrative. But yeah, I'm interested in that company. Maybe we'll talk about that on the next Bootleg Weekly. All right, Tevis.
Okay, so I don't know what Charlie's question is. He just wanted me to talk about the miners. I'll give you a quick update. So I do own Coinbase. For whoever asked that, Coinbase I think is in my definitely my top 10, maybe in my top 5. But I recently doubled down on CleanSpark and on Mara. I bought heavy amounts of both of them. And I made a video about that about 2 videos ago where I deployed, the money, and I'm running the wheel on that. And I think that we are at an early part of the cycle that the miners are going to benefit. I know we sort of differ in this as well, because you're selling the miners and I'm buying them. But I really do think that as Bitcoin crosses 6 figures, then the miners will see that pump in a big way. And the dips that we saw recently, I mean, we saw Mara dip on earnings, and people like complain about dilution, which I think is absolutely stupid, because people who are buying the miners are buying them as proxy bets on Bitcoin. And you have different miners taking different stances, like regardless of their hash rate, regardless of, how many Bitcoin they're cranking out. The ones that are diluting are essentially doing so that they don't have to sell their Bitcoin. And so in that situation, seeing it as a proxy vote, and by the way, this is not a long-term hold for me. This is a trade. As Bitcoin crosses 6 figures, then Mara and CleanSpark will pump. They'll pump above certain technical levels, and I am going to get out of them and book a healthy profit in doing so, especially for the time period that I'm holding. I'm also going to get out of Coinbase as it pumps. I think it pumped to like 330, pulled back. I think it can definitely far surpass that level as Bitcoin crosses into 6 figures. And so the whole idea is, if Bitcoin, or when Bitcoin crosses over 6 figures, crosses that $100,000 threshold within the next couple of months, in December, January, February, March, by that time, by March-ish is like my time frame max, where once my price targets are hit, then I'm out of these trades. And in between that time, then I'm just going to be running a wheel. And if I get assigned, I get assigned because I'm running it like, 30% out in a weekly, and collecting premiums while I'm doing that. Now, the other thing, just to finish up, the other thing that I'm doing is I am buying calls for CleanSpark and for Mara for January and for February in 2025. And I'm doing that with the premiums that I'm collecting from the covered calls.
My question is, isn't there a company that you're aware of that prints money and is a crypto and Bitcoin proxy that has exceptional leadership and is not nearly as cyclical? Why not just buy some Robinhood, dude?
So I do think that a couple reasons, actually. First of all, I don't want to lock up this money for the long term. And second of all, I think that the miners are going to be a more direct proxy than Robinhood is. Yeah. And then third, a buddy of mine was asking a similar question where he was like, why don't you just buy like Btg, like the Bitcoin ETF? And the reason is because the miners are more volatile and they have more premium associated to them to run the wheel on.
So if you have time, and I had to format my computer, I don't have this data any longer. Look up the correlation coefficient. Like you'll have to. I don't know. There's probably a website that does this between Bitcoin, between Robinhood, Coinbase, and your favorite miners. At least when I did this, and I've done this a couple of times, but yeah, I had to format the computer like 6 months ago, so it's not been recent. There was a stronger correlation between the price movement of Robinhood and Bitcoin than any of the other proxies. I think MasterStrategy might have been an exception. I don't know why I didn't plot that one. I didn't. But the thing is too, you don't know when the top is going to be. Like with miners, that I do love that you're doing options on them. That's what I do for most of my miners. I'm completely out of miners right now. Well, that's not true. I actually sold some cash secured puts. So I'll probably be back into Clean Spark, maybe Cypher. I haven't done anything with that one yet. But I just trade them back and forth, and I enjoy the premiums. But they are
Right.
terrible businesses. They have really sketchy leadership. They're dilution machines. They buy private jets. They're like, oh, our Bitcoin mining business. Let's instead go over here into energy, or these really fancy, nice computers, or let's start selling like gold mining, or just all kinds of like crazy, weird stuff. And when businesses do that, it usually tells you that the leadership is not confident in their business model. Now, that's not every miner, but that is most of them. And they see the writing on the wall that there is a cap to a limit of Bitcoin. And of course, as those halving cycles continue, they have to have a higher and higher price of Bitcoin. They're profitable right now. I think most, if not all of them, with Bitcoin at the current price that it's at.
Right.
But yeah, they're sketchy. Versus Robinhood, they don't care what the price of Bitcoin is. They don't care how much Doge is. They just care that you actually go in and you're trading it back and forth. And when you have this kind of up or down market, people do that all the time. Plus, because of regulatory scrutiny lightning, Gary Gensler's likely out on day one of Trump administration. All of a sudden, you're going to have a greater clarity on as far as SEC with crypto. And already Robinhood said, okay, we already removed Solana, XRP, and ADA. We added those back onto our platform and paid Bitcoin. Now, the only one of those that I like is Cardano. Solana is okay-ish. Cardano is the only one that I own of those. Ethereum and Bitcoin too for me. But I mean, like, they're going to be able to do so much with that. Plus, they're into stable coins now. Robinhood, I'm telling you, is a much easier play. And you can sell it. The nice thing is, anytime. You don't have to hold it forever. Get some Robinhood, man. Do yourself a favor.
Yeah. No, I mean, I've been circling around Robinhood for quite a while, and I might just pull the trigger at some point. We still have to do that video on Robinhood, because I would love to have some of my questions answered, on Robinhood, and actually dive a little bit deeper into the specifics of owning that. But yeah, like, I think for me, I'm not trying to time the top by any stretch of the imagination. I am just trying to get a certain return on my money as Bitcoin pumps, and then the leaps out, or sorry, the calls for January, like, I'll just let them run and sell them like on a strong pump, because these things, like, Mara was up like 25% the other day, and then it was down 15% the following day. So it's super volatility that I'm trying to ride, and I'm being opportunistic with that. So I'm not being greedy. But I'm also acknowledging the writing on the wall to say, okay, well, this thing is on a clear uptrend. Like, what is Bitcoin at right now? It was at 93 or something last time I checked. 87, I think, right now, 88. So it pulled back a little bit. My point is as it goes up, the miners eventually will either front run, or they'll be a little bit late to the game, but they will, directionally speaking, go in the same direction. And I want to be able to capitalize on that. Were the miners the best play? Maybe there could have been another play. Maybe MicroStrategy might have been better. Maybe Robinhood might have been better. Maybe a Bitcoin ETF might have been better. The miners is what I'm in right now. I think Bitcoin's going to be the rising tide. I want to cut loose on the miners. I want to cut loose on Coinbase eventually. And then probably that money I'll cycle into other things that I want to hold on for longer term.
And I'll say selfishly, I want you to own Robinhood for two reasons. One, I like you making money. You're my friend. And two, I would like to add to Robinhood. And so if you could just buy like 100 shares so it like collapses to 24 or something, that would be fantastic.
I will definitely consider it, and I'll buy some Palantir while I'm at it.
Oh, man, don't do that. Actually, I have some covered calls underwater. Yes, buy some Palantir. That would be great. Yeah, we'll normally do this on Tuesday, guys, just because of some personal stuff, health issues on my end. I sounded like RFK Jr., by the way. I think I even sent you a voicemail message or voice message on X. I don't know if you listened to that or not, but
I
it was
did.
rough.
That was a very sultry voice, and
So not at 100%, but I couldn't really talk on Tuesday. So, but yeah, thank you guys for tuning in. As always, we will hope to resume on Tuesday on our normal scheduled time. Might talk some in phase, might talk some more Bitcoin. We'll kind of see what's cooking with the market. There's a lot going on, exciting times. Happy and successful investing to all you guys. Till next time.
thanks everybody. See ya.